Hi everyone, this is G Sai Babu, Commerce Lecturer and Motivational Speaker. Welcome back to Commerce Video Classes. Today, I would like to discuss the topic, the classification of accounts. So, first of all, what is the meaning of account? Account, it is a summary of relevant business transactions. And account, it is a T-shaped proforma. Account is a T-shaped proforma. And account, it has the two sides, left side, right side. The left side equal to all the debit aspects and the right side equal to all the credit aspects. The debit in the short form DR, credit in the short form CR. And debit and credit, these words are introduced by the Edward Jones. And these debit and credit are equal according to the double entry system. This double entry system is introduced by the Luca Fagioli. The Luca Fagioli, he is the father of accounting. Account can be classified into mainly two types. The first one is the personal account. Second one is the impersonal account. The personal account. The personal account is nothing but it deals with the all individual persons and individual businesses. And the personal account again be classified into three types. First one is the natural persons. Second one is the artificial person. Third one is the representative persons. And the first one is natural persons. So what is the meaning of the natural persons? The natural persons is nothing but these natural persons, it deals with all the human beings. For example, Ramu, Sita, Geeta, Ramesh. So these all are the natural persons, or these are all the human beings. The personal account, it deals with all the human beings accounts. Artificial account is nothing but, for example, a company is an artificial person, a clubs it is an artificial persons, a cooperative society, these all are the artificial persons. Third one is the representative persons. These are the representative persons. These are not in the name of any persons or any organizations. The representative persons, example, outstanding salaries or outstanding rent, prepaid salaries or prepaid rent. These all are the aspects it will be deals in the representative account. And what is the personal account rule? The rule of personal account is the debit is the receiver, credit is the giver. The receiver equal to debit, giver equal to credit. That is the rule of the personal account. For example, Ramu account, Ramesh account, outstanding salaries account, prepaid salaries account. These all are the personal accounts. And what is the example of the personal account? Goods sold to Ramu. This is one of the example. What is the journal entry? Ramu account data to sales account. Ramu is a receiver. Which purpose? Selling purpose. The Ramu account data to sales account. Who is the receiver? Ramu. For that, I am debiting the Ramu. And another example is purchased goods from Siddharth. Here, the purchasing the goods and services from the Siddharth. The Siddharth is the giver. Which purpose? The purchasing of the goods. The purchase account data to Siddharth account. This is the example of the personal account. And the second type of account is the impersonal account. The impersonal accounts, it's not deals with the persons. The impersonal accounts, it can be classified into again two types, that is real account and nominal account. First of all, real account. What is the meaning of real account? The real account, it deals with all assets of the businesses. And I discussed already in the previous classes what is the meaning of assets and what are the classifications of assets. So here, the assets means these are the properties of the individual persons or properties of the businesses. The assets can be classified into mainly two types. tangible assets, intangible assets. The tangible assets means we can see, we can touch, we can feel. Such type of the assets are called tangible assets. But what is the meaning of intangible assets? The intangible assets is nothing but we cannot see, we cannot touch, we cannot feel. Such type of the assets are called intangible assets. The tangible assets can be classified into again the two types, that is the fixed assets and current assets. The fixed assets is nothing but these are the assets which gives the benefits more than 1 year period to the businesses. When you are to starting the any business without purchasing of fixed assets, there is no any commencement of the businesses. For example, machinery is the fixed asset, building is the fixed asset, land is the fixed asset, furniture is the fixed asset, motor vehicles is the fixed assets. These all are the fixed assets. They give the benefits more than 1 year period to the businesses. And second one is the current asset. The current assets is nothing but it gives the benefits to the businesses less than 1 year period. The current assets, for example, cash is a current asset, checks is a current asset, stock is a current asset, bills receivable is a current asset. So these all are the tangible assets. And the second type is intangible assets. The intangible assets we cannot see, we cannot touch, we cannot feel. Such type of the assets are called intangible assets. The intangible assets, for example, goodwill is the intangible assets, patents is the intangible assets, trademarks is the intangible assets, copyrights is the intangible assets, business premises is the intangible assets. This is the classification of assets. And the real account, it deals with the all assets of the businesses. So what is the rule of the real account? The real account rule is what comes in debit, what goes out credit. That is the rule of the real account. And for example, machinery account, furniture account, building account, motor vehicle account, these all are the example real account. And what is the example journal entry of the real account? Purchasing the machinery with cash 20,000 rupees. Machinery, it is a asset. The cash, it is also asset. So what comes in? Machinery. What goes out? Cash. So as per the real account, the what comes in? Debit. What goes out? Credit. In this journal entry, what comes in? Machinery is the debit. What goes out? Cash is, it will be credit. So here the machinery account data to cash account. This is the journal. In the impersonal account, the second type is nominal account. The nominal account, it deals with the all expenses, losses, incomes, profits and gains of the businesses. And what is the role of the nominal account? The debit, it is the expenses, losses. Credit is the incomes, profits and gains. Debit, it will be recording the all expenses, losses. Credit, it will be recording the all incomes, gains and profits of the businesses. For example, salary paying account, rent account, commission received, rent received, discount allowed, discount received, interest on investments, interest on capital. These all are the example of nominal account. And what is the example journal entry of the nominal account? Paid salaries to Ramu with cash 20,000 rupees. What to pay the salaries to the Ramu? The salaries expenses. As per the nominal account, all the expenses are debit. Okay. The salaries account data to cash account. Another example is rent received 2,500 rupees. The cash is received and which purpose? Rent. And another example is commission received This is the income. What comes in? Cash. Which purpose? Commission received purpose. Okay, this is the cash. Cash account debit to commission account. This is the example journal entry of the nominal. Simple. Personal account, real account and nominal account. These all are the golden principles or golden rules of accounting. The personal account rule. Who is the receiver debit? Who is the giver credit? The real account rule. What comes in debit? What goes out credit? The nominal account rule. Expenses, losses debit. Incomes, gains, profit are the credit. In this accounting, all the business transactions recording by using these accounting golden rules or accounting classifications. Thank you, students. Thank you very much. All of you watch my videos, subscribe my channel, share and click the bell icon. Thank you, students. Thank you very much. Stay home and stay safe.